Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track 6 hours of the day's trading action in 5 headlines. I'm Sonia Shenoy and these are all the top headlines for the day. The markets end lower. The Nifty and the Sensex see cuts of over 1%. IT and metals drag while FMCG stocks lend some support. Mukesh Ambani announces a 5G rollout from Diwali, a foray into FMCG business, a new gigafactory for power electronics at the annual general meeting. Also says the near-term goal is to double in value by 2027. And Jerome Powell's speech pushes up the dollar index to a fresh 20-year high above 109. The rupee falls to a fresh all-time low of 80.1, but recovers to 80 per dollar on the RBI dollar selling. Bond yields to rise by 5 basis points to 7.25%. And the long-awaited demerger of Piramal Enterprises, pharma and financial business is set to take place this week. Traded as a combined entity for the last time today and ended close to 3% lower. And Endurance Technology tells CNBC-TV18 it's seeing 6 to 8 hours of power cuts a day in Europe, but it's not looking at exiting the region anytime soon. Samvardhan Madison says it is eyeing 7 to 8 more acquisitions, and irctc falls 4% as sources say that the company has dropped its plans for an offer for sale worth 3,000 crore rupees. Well, here's the lineup of what we have in store for you. It's a packed show today in Market Opinion. We have Sameer Arora of Helios Capital. The big corporate voice today on the show is Mukesh Ambani, the chairman and managing director of Reliance Industries, on the succession plan of the company. Well, straight to the day's market action. The market ended the day in the red with IT and metals falling the most. Now, what took place today at the start of trade, there was weak global cues and that really dragged down our own markets. The Nifty was down 228 points by the end of trade and the Sensex as well down over 800 points. Now, it was cautious commentary from the Fed Chair Jerome Powell that spooked most global markets. Of course, our own markets recovered a tad bit from the lows as well. Technology stocks are the ones that ended with the deepest cuts today, about 3 to 5% losses. In fact, names like Tech Mahindra, Infosys, Wipro were all down about 3 to 4.5%, and banks were under pressure as well. So these were two key leadership pockets that came in for a sell-off. Kotak Mahindra Bank, Axis Bank down about 2 to 3%. What supported the markets today was FMCG names, Britannia, Nestle, Asian Paints. Basically, the domestic focused sectors really provided support to the market. In terms of non-index movers, you had names like Zomato, SAIL, Nalco and RBL Bank that were losers today, down anywhere between 2 to 4%. And of course, Reliance Industries was the stock in focus. The company will be launching the largest 5G network by Diwali this year. But in Market Opinion, Tahir Badshah, the CIO equities at Invesco Mutual Fund, said a correction of 8 to 10% should bring the market back to the 5-year average valuation levels. He also added that he continues to bet on the domestic opportunities over the global ones. Listen in.
Things will look a little tentative from here on. I really don't know how much of correction can be possible after this, probably about 15% rally from recent lows. But yes, I think if we probably get to levels which are at which the markets once again trade below their averages, and we had moved a little above our averages in the last move of the market. So I think probably a correction of around 8 to 10% can probably put markets at less than 5-year average once again, and that becomes a comfortable point in my view. For some time, I think we've kind of been looking inwards. We've been looking at the domestic opportunities a lot more than the global opportunities. Things at home appear to be relatively more, provide a lot more confidence across different kinds of sectors. Some part of it we have seen coming through in the form of a rally, whether it be in some parts of consumer discretionary, autos, industrials as well. They played out pretty well over the last some time, but they still remain go-to pockets for us on corrections. I think financials has been something that we have pursued for a very long period of time, and that's also an area which remains comfortable for us.
Okay, comfortable with the financials, but in more Market Opinion, India will outperform China, EU and the US. That's not me, that's the word coming in from Sameer Arora, the founder and fund manager at Helios Capital. He adds that he expects this trend to continue going forward, the outperformance that we've seen in the Indian markets. Take a look.
I think the way to look at it is that we are outperforming. We will again continue to outperform, but I don't think we are going to make more money from here for next 3-4 months. And maybe we give back nearly all of it, or that I don't know. But generally, we can only be happy that India most probably will outperform China, Europe, US, because you can see some specific, even beyond inflation issues, although maybe US is mostly inflation. But if those markets are down, and I think now they'll be down quite a bit, then we will outperform. And I think that is the best we can hope for the next few months. We would be high. I mean, our normal average for the last, again, I say for 17 years has been 62%, and currently we are at maybe 68 or so, and it should be brought down. Yeah, what I mean, easily go back 5-10%, 10%. Or, you say it's 18, but that is precisely from some maybe intraday bottom or something. Broadly, we feel it's up 8-10%, generally speaking. Big picture, because I don't even look at it that micro. For example, if you ask me right now, what is the Sensex? I have no idea what is the number. I only talk in percentages.
Okay, to the second headline now, and the big one of the day, 5G rollout starting Diwali, doubling the conglomerate's value in 5 years, a foray into FMCG and ramping up the new energy business. These are some of the key highlights of Reliance Chairman Mukesh Ambani's speech to shareholders at the company's 45th annual general meeting. Ambani said that the 5G rollout would be launched in multiple key cities, including Delhi, Mumbai, Chennai and Kolkata by Diwali this year. Jio is looking at a pan-India rollout by the end of 2023. Ambani also announced a 2 lakh crore investment for the rollout. Reliance Retail will also launch its FMCG business this year. Executive Director Isha Ambani said that the objective of the business is to develop and deliver products that solve every Indian's daily needs with high-quality products at affordable pricing. Mukesh Ambani also spoke about the succession plan. He said Akash and Isha Ambani have assumed leadership roles in Jio and Retail. Anant Ambani has joined the new energy business, and the chairman continues to provide hands-on leadership. Okay, Reema joins in now to take us through the key highlights as far as Jio's 5G plans are concerned. Reema, over to you.
The timeline of the much-awaited 5G rollout. Jio has said they will launch 5G across multiple key cities, including Delhi, Mumbai, Chennai and Kolkata, and this is going to happen by Diwali of 2022. And then they're aiming for a full pan-India 5G coverage by December of 2023, less than 18 months from where we are currently. The second takeaway is look at Jio's monetary commitment to 5G. Jio has said that they will be investing 2 lakh crore to build a pan-India true 5G network. And remember, this comes after spending a whopping 88,000 crore on acquiring the 5G spectrum in the first place. They say the business case for 5G is so strong that they can achieve high teens ROC through a combination of mobility market share gains and SUC savings alone. And for those of you who are waiting for 5G-like broadband at home and a 5G phone, there is good news. Jio 5G will be also offering ultra-high-speed fixed broadband called Jio Air Fiber, and they also said that they're working with Google to develop an ultra-affordable 5G smartphone in India. 5G is also going to be, Jio 5G is also going to be the world's largest and the most advanced 5G network. Let me tell you why. Now, most operators in India are going to be deploying 5G on a non-standalone network, which basically is your 5G radio signal, which is delivered on the existing 4G infrastructure. Reliance Jio, on the other hand, will be deploying the 5G radio signals on a standalone network. With this, Jio can deliver new and powerful services like very low latency, massive machine-to-machine communication, 5G voice, edge computing, network slicing, metaverse. And lastly, something which can make all Indians proud. Jio's 5G network has been indigenously developed. The end-to-end 5G stack developed by Jio is indigenous, which is fully cloud-native, software-defined, digitally managed, with support for even advanced features like Qualcomm security. Back to you.
Jio has prepared an ambitious and the fastest ever 5G rollout plan for a country of our size. Within the next 2 months, that is by Diwali of 2022, we will launch Jio 5G across multiple key cities, including the metro cities of Delhi, Mumbai, Chennai, and Calcutta. Subsequently, we plan to increase the Jio 5G footprint month after month until by December of 2023, which is less than 18 months from today, to deliver Jio 5G to every town, every taluka, and every tehsil of our country.
Okay, big plans from Reliance Jio, but let's now go across to Sonal Bhutra, who's going to tell us the road ahead for the company's oil to chemicals business. Sonal, over to you. Well, yes, big bang announcements by Reliance Industries in both O2C and the new energy business. In the O2C business, they are expecting 75,000 crore of capex to expand their capacities across value chains, 75,000 crore rupees in the new energy business as well, as announced earlier, but they have a potential to double the commitment there as well. Let's start with the O2C business, where in PTA plant and PET plant, they are expecting an expansion of around 3 million tons per annum in PTA plant, and PET will see 1 million ton per annum of expansion, and they expect it to be completed by 2026. They are also targeting to complete 1.5 million tons of feedstock integrated PVC expansion. In total, they are expecting to triple their existing capacities across all the plants in their O2C chemicals or the PVC value chain. They are building in phases India's first and one of the world's largest carbon fiber plants at Hazira, and they plan to integrate composites business with carbon fiber to produce carbon fiber composites. That's about O2C business. In the new energy business as well, they said they're establishing 10 gigawatt of annual cell and module capacity by 2024, which can be scaled up to 20 gigawatts by 2026. They are aiming to extend the life of the PV modules from 25 to 50 years, and they are also establishing more solar energy capacity in general. They will be investing in glass and film manufacturing, starting manufacturing of battery packs by 2023, and also fully integrating 5 gigawatt hour of annual manufacturing capacity by 2024, which they can actually expand to 50 gigawatt hour. They are setting up a new gigafactory for power electronics as well, and they are planning to commence their transition from grey hydrogen to green hydrogen finally by 2025. They say that new energy business of Reliance Industries will help the company, or the country actually, to become a net exporter of green energy. And lastly, on the KG Day-6 basin, they said that now the contribution is around 20% of the total India's gas production, which could actually increase to 30%. Okay, that's about the oil to chemicals business. In fact, the company also said that Reliance Retail will launch its FMCG business this year, and that space, Reliance Retail, has been growing at a rather fast pace. Mangalam Malu is here with those details. Mangalam, over to you.
The big announcement coming in from the retail arena this time around from Reliance's 45th AGM was the launch of a full-blown FMCG company. They will launch an FMCG business this year, was the key headline that came in from there. Remember, Reliance has been selling FMCG products under its Snack Tag brand, etc. But this time around, the fact that they will formally launch it is a big positive. In fact, the objective of the company is to develop and deliver products that solve every Indian's daily needs with high-quality products at affordable prices. We've seen this internationally, where, you know, in-store labels do extremely well for a couple of companies, the likes of Costco, etc. as well. And they will soon also start marketing quality goods produced by tribals and other marginalized communities across India. So that will also be a niche product that Reliance's consumer business will sell. In fact, they are also on course to partner with 1 crore merchants, and this compares with around 20 lakh merchants that they've added until now. And this will happen in the next 5 years. They've launched the WhatsApp JioMart partnership. In fact, you know, that is a big trigger as well, where you can place orders on JioMart through the WhatsApp app, and that would be a good combination of user interface with Reliance Jio's network as well. In fact, it will also be using, you know, WhatsApp Pay along with cash on delivery and all the other payment methods. Own brands currently contribute around 65% to their retail sales, and that will continue as well. But over and above everything was the statement of confidence coming in from Mukesh Ambani, saying that Reliance Retail will grow exponentially and become the largest segment within the group. Retail so far has been the valuation driver for Reliance, and it's only likely to grow further with the announcement of the FMCG business.
Okay, thanks a lot, Mangalam, for that. Well, the third headline today, emerging market currencies fell after Jerome Powell's comments at the Jackson Hole summit, with the rupee hitting a fresh record low below the 80 rupee a dollar mark. However, it has recovered slightly since then. But Lata is here to give us more details on what led to this fall that we saw intraday. Lata.
Yes, it was an all-time low for the rupee at 80.12. And that's largely dictated by the global rush of the dollar rising to a fresh 20-year high on Powell's speech. I mean, if there is no interruption in the rise in the yields all the way to 4%, the Fed funds rate, then clearly the dollar was stronger, and dollar went to the index went over 109 at one point in time. So all EM currencies are lower, between about 0.2 and 0.8%. That's the range. The rupee did recover towards the 80 mark because of Reserve Bank selling a lot of dollars. But just want to add, there are two things. One is that the rupee has actually strengthened vis-a-vis other EM currencies in the past 1 month. And therefore, the Reserve Bank may be okay to allow a little bit of depreciation because you do want to remain competitive with other Asian emerging markets. The other thing is that there is this big expectation that Indian bonds will be included in the JPM index, at least the Financial Times story of Friday indicated that. And that also means a little bit of cushioning of India. So that could be actually positive for the rupee. Speaking of which, the bond yields, which had risen a lot, which had fallen a lot on Friday on the bond inclusion news, actually today gave up their gains. The bond yields rose again by about 4 or 5 basis points despite this bond inclusion news, because the bond inclusion news only helps the spot bond market. In the OIS market, swap market, actually bond yields have risen by 10 basis points. And that obviously is that if the US continues to raise rates, then India can't pause anytime soon. So those fears are creeping in. And plus, of course, crude is still 3 digits, you know. The recession fears are not hitting crude as much. And that's another negative for bonds.
Okay, thanks a lot, Lata. That's about the currency. Let's slip into a quick break on that note. But do stay tuned in. We'll be back in a jiffy with all the other top headlines. Welcome back to Markets Today on CNBC-TV18. Well, the fourth headline today, the long-awaited demerger of Piramal Enterprises Pharma and Financial Services business is set to take place this week. The conglomerate, which currently houses both businesses together, is set to list the two entities separately. The company traded as a combined entity for the last time today and ended the day 3% in the red. Ekta is here with all the details. Ekta.
Well, this week, the long-awaited demerger of Piramal Enterprises Pharma as well as the financial services business is set to take place. The conglomerate, which currently houses both of the entities, which is basically the pharmaceutical as well as the financial business, is now going to be separate. The record date is set for the 1st of September, and you could have accessed the combined entity until the 29th of August. Now, basically, there will be around 1 share of Piramal Enterprises for every 4 shares of Piramal Pharma. So that means that Piramal Pharma will have a total of around 1,193 million outstanding shares. When it comes to market capitalization, it is expected to be between 24 to 25,000 crores, which in fact is a premium to the 18,000 crore valuation it was given in 2020 when Carlyle picked up around 20% stake for around 3,700 odd crores. Carlyle is expected to get around 239 million shares and is expected to possibly retain its stake at 20% for Piramal Pharma. Now, a couple of key points. The entity, the pharma entity, contains 3 main businesses, which is basically the contract development and manufacturing business. The majority of sales comes from this particular arm. The complex hospitals generic as well as the Indian consumer healthcare business, or both of these entities together comprise of around 40% of their total sales. Now, in terms of a couple of key points, the listing is expected in Q3 of FY22 and CLSA is expecting a listing by possibly mid-October. The brokerage is valuing the company at around 1,030 rupees, which should translate to around 206 rupees per share on listing. They, in their note, have said that they look forward to listing as they expect more disclosures, financial statements for greater insight in the pharma business going forward.
Okay, Ekta, thanks a lot for that. But stay on. There were a lot of other pharma stocks that were in the news. While Cipla and Glenmark ended lower on regulatory issues, Jubilant Pharmova gained on a green signal from the US FDA. Can you take us through those details as well?
Well, yes, I'll start with Cipla, which was in focus. Their Goa plant received 6 observations from the US FDA in terms of an inspection which was just completed a couple of days earlier. Why is this important? Is because this particular facility was inspected in September 2019. It received a warning letter in Feb 2020, and now the street is possibly anticipating a delay in the resolution of this particular warning letter. Remember, the company has indicated that the observations which were issued this time, there was some referencing to the September 2019 observations as well. Also, the street is fearing any kind of delay in terms of key drug approvals such as Abrixon, which is a cancer drug and expected to be around 2 to 4% of the company's sales. It is filed or expected to be filed from this particular facility. Now, Glenmark was in focus because of its Goa plant as well. It received an official action indicated status from the US FDA. It was inspected in May of 2022 and issued 5 observations, which is now turned into an OAI, which means that there could be some delay in product approvals and the risk of regulatory action could increase on this particular plant. Lastly, Jubilant Pharmova received a go-ahead from the US FDA on their Montreal facility. They received an establishment inspection report with a voluntary action indicated status, which means that it's a thumbs up to manufacture for that plant.
Okay, that's on the pharmaceutical space. Well, the fifth headline today, Endurance Technologies fell 0.5% after told CNBC-TV18 it's seeing 6 to 8 hours of power cuts a day in Europe, but it isn't looking at exiting the region. In fact, a lot of other auto ancillary stocks were in focus. Somewhat than Motherson as well ended 3% lower on profit taking. Listen in to what Endurance had to say.
I understand that now we are talking about power cuts to the extent of 6 to 8 hours a day. Now, if that happens, which is likely also, if that happens, then the pressure on the industry would be far more. Some of the industries, some of the low-ended auto ancillaries, they might even shut down because they would not have the muscle power to bear this, this challenge of electricity cost. Because beyond a point, how much can you spend from your own?
Okay, moving on to an exclusive now. Sources are telling us that IRCTC has dropped their plans for an offer for sale worth 3,000 crore rupees. Yash is joining in to tell us more on that. Yash, what are you picking up?
Well, Sonia, so on IRCTC, we are talking about 2 withdrawals today. The first one, of course, what the company disclosed over the weekend, which was essentially withdrawal of the tender for appointment of consultant when it comes to monetization of consumer data. The second one was with respect to what sources tell us, and that is with respect to the government dropping the plans for offer for sale or OFS for IRCTC as of now. The reasons which our sources tell us have been around market volatility. The government wants to wait for the market to stabilize before launching this particular OFS, and that's why for now the request for proposal or RFP for IRCTC OFS has been withdrawn. Of course, this RFP was with the bankers for quite some time. They were looking at the right time to launch the OFS, but for now seems like that RFP has been withdrawn. It was a large offer for sale for IRCTC, about 3,000 crore rupees, which entailed a dilution of about 3.5%, which will now happen once the market stabilize as per our sources, when the government will ascertain the situation and take a final call on it. IRCTC has replied to the exchanges on this particular report, saying that it is not aware of any such information and such decisions for the company, since it's a government-owned company, are taken by the Government of India.
Okay, thanks a lot for that. So that's on IRCTC, but Citi Union Bank is the other stock that fell over 5% in trade today on the back of an inspection report disclosed by the RBI under the Right to Information Act. As per Money Live, the report has suggested poor management control and sanctioning of high-risk loans from senior officials to the top executives without following the RBI guidelines. In fact, we had a chance to speak to the MD and CEO N. Kamakodi, who said that all the points mentioned in the report have been satisfactorily addressed and resolved, that the explanations submitted to the central bank have also been accepted. Listen in.
All the points mentioned in these reports, which are already out in the public domain, have been satisfactorily addressed, and there is no pending issue. This is something which I want to assure you and which I want to tell you. The matters, whatever that is given, are taken out of context, and they are, given, and they are misleading headlines, probably make people to make weird conclusions and all. On the 3 reports which are already published, there is not even a single outstanding point which is, pending for compliance or whatever that I want to give. If we had sanctioned those, loans beyond IRAC norms and they are not, good, they would have already formed a part of divergence and they would have been classified as an NPA by the auditors or by the regulators. The fact that they are, not reclassified as NPA itself, it means, yes, I accept there could be an amber. The fact is that, we bankers are there to assess the risk and take that. And we will definitely be asked questions about that, and we have to give explanations for that.
Okay, that's on Citi Union Bank. But with that, it's a wrap on this edition of Markets Today. Have a great evening.